Hello, everybody. This is Joshua Hayes at Big Wade Trading for your January 14th stock market wrap up for you to use today, January 15th, or for whenever you want this week, because there's really only one thing to say. Duh. That's about really all you need to say whenever it comes to this market for one reason. I've been saying the same thing now for a long time, and now it's becoming to fruition. As you can see, the S&P 500 sold off today on higher volume above the 50-day volume average. Now, while it seems like a bad thing for the market overall, you have to remember we're on the right side because we're one of those crazy technicians, and I guess that we're bad technicians because we don't know how to read charts, and that's why we never got bullish when everybody else got bullish, and that's why I don't think the charts look good here. Well, I guess they were saying, well, the November lows, if that holds. Well, listen, I would think the November lows could hold if we would have rallied on strong volume. But considering that the end of December going into January was on extremely low volume, and then since then, as you can see on this weekly chart, that we followed that with a heavier volume distribution so far on a weekly, just tells me that it's still time to sell. And the worst part is that I have a scan that picks up longs before they break out. So normally it picks up stocks already in uptrends, setting up in beautiful bases. And normally if we have a bottom, this scan will expand as we go on from the November lows to now. However, my scan is as ugly now as it ever has been. The November lows, that's nothing compared to what my scans look like now. My scans look horrible. Now, oh, that's bad news for us, right? Well, listen, you can look at it this way, or you can suck it up and deal with it. And that's what we're going to have to do. We're going to have to deal with it. That's why I have 34 shorts. I am still short. Out of those 34 shorts, 33 made money today and will continue to make money if this market continues to sell off. And I don't think it's a matter of if, but it's how far and when will it end. Because I think that we're just looking basically at a repeat of the. If we look at the NASDAQ top, okay, let's just go and get to the NASDAQ first. S&P 500, you can see it rolling back below the 50-day moving average on stronger volume. You have a clear distribution day here, followed by a do-nothing day, and now another distribution day. So in 3 days, 2 distribution days, down 5.3%. That's not good. And plus, besides that, I've gone from what was at one point, I would say, what was that? On January the 8th, I had 13 longs. 13 small longs, mind you. So let's make that clear. And now I only have 6 longs. Why? I've cut my losses on all the rest. The only 6 that I have, I think 3 or 4 of the 6 are A stocks, which means that they begin with the letter A. And out of all those 6 longs that I have, 5 of those stocks are just one bad day away from becoming full sells. Because I'm not going to do what Kramer does and buy on the way down and have a negative 40% to return for the year 2008. Instead, I'll walk away with the game by going short. And speaking of that, that is what this time is to do, folks. I know that a lot of stocks are extended now, but some aren't. And as those come up, we'll be going short them. We have a new short tonight. I'm going to take it. And recently, there's been a couple of shorts that have shaken me out. And darn nabbit, they're right back to moving lower again. So the shorts are working, and even when I'm getting cover signals, they're going completely lower. So I might have to hold on to my shorts a little bit longer in case if I even do get a reverse signal, and I'll have to have a confirmation of that reversal before I start covering now, because it's clearly obvious the right side's the short side and always has been. But just in case we did have a low, there were some longs that showed up. We tried to play them, they all failed. We move on. We start piling back into the shorts because obviously that's the right side. If we break to November lows, so that's all I gotta say. I'm sure that we'll go past the 2002 lows, and I'm sure that we'll easily go back to the 94 area minimum. I could see us easily going to 500 area on the S&P 500, to be quite honest with everybody. Might as well just get it out of the way. Let's make money. Let's collect money while the others lose it. While everybody goes buy Citigroup and Bank of America, let's go short some of these top leading stocks. And then also, if you're braver than me, because I'm not brave, I'm not going to short Citi here. But if you can short it, short away. Because a stock that was once as high as Citi, let's get up here to show you See how it was over $50 a share? It hit $50 a share. Now that it went below $10 a share, most stocks that were once 50 that hit 10, 95 to 90% of the time they end up hitting 5. Boom, Citi did it. And the stocks that hit 5, it's 85 to 90% of those end up hitting $1. So chances are high that C is going to hit $1. And that means chances are high that BAC is going to hit $5 now. So if you've got the guts that I clearly don't have, go ahead and short it, man. I should probably buy some puts on these, because if a stock once hits 50 and then it actually hits 10, the chances of it ever hitting 50 again is virtually zero. And the chance of, see, look at this one, BAC over 50, just like C. Now hitting 10, which means it's probably going to hit 5. But I don't know how choppy it's going to be, and I'm not safe enough to take a short from here. Instead, I just know that the indexes are very bearish. Look at this NASDAQ chart. That's not good. Volume was about just as heavy as yesterday. Let's look at a weekly right here. You can see it's a distribution day week. In 3 days, it's down 5.21%. And it's clearly rolling overtime. And we can sell off on low volume. Never forget, you can have a long sell-off on low volume. Go check 2002 and go check the 1930s also. By the way, if you want to review the NASDAQ 2000 to now, go back to the Dow Jones Industrial Average 1929 and go all the way up to like 1954, right around there, and take a look at that market, because chances are you're going to see this again. And also, that's another thing, NIKI/X. That's got to be it. Right. I want you guys to see something here with the Tokyo Nikkei Index. Now, it doesn't go back to 1990, but 1996 is good enough for me. Here in 1996 to now, you can see this index is down 61%. Now, it's down a lot more than that, because I believe here it shows 22,000 is the high. So you see that this index hit 22,000 on this chart. Where is it now? 8,309. So from 22,000 to 8,309. However, in case some of you don't know, the Nikkei's high in 1990 was 38,000. The Nikkei hit 38,000 in 1990. Here it is, 2009, and it's at 8.3 thousand. So that means in 19 years, the market is down somewhere right around, what is it, 90%, 85 to 90%. So remember that you can have that. However, look at some of these rallies that were in this. After this initial move down, the Nikkei had a 46% move from 95 to 96. The Nikkei had a 37% move from 98 to 2000. From 2003 to the 2007 and top, the Nikkei had a 117% move. During these times, you can make money in the stock market. So even though the Nikkei is down right around 85 to 90% since the 1990 and has gone through a lost 2 decades, there has still been uptrends to make money. And that's why in this market, you have to pay attention, because there will be times to make money come the uptrends in this market. Trust me, everybody, trust me. And Kramer's FXI that he just bought recently, yikes, not doing too well. So the Shanghai maybe isn't going to be going up either. And I thought it might have a shot at going higher. Let's take a look. And you know what? It's still holding in the lows. Look at the November lows. Look at all the open bodies and bullish tails. And even look at the bullish day it had yesterday. Up 3.5%. That's awesome. And the Nikkei, what was it yesterday? Yeah, down 1.24%. So that's awesome to see that. So China is the leader without a doubt. Now let's go look at the commodities really quick to wrap this up. Oil's at 37, still in a downtrend with a price below the 50 and 200-day moving average. That means you'd only want to be short. Gold is hanging barely onto the 50-day moving average. If it breaks below the 50-day moving average, you would already, from the long that you would have taken in the 2nd December move right here, you would already have wanted to have been out of most of it whenever this day happened. And now, if you're not out of all of it, you would want to be out of almost completely all of it now, as you only have a 0.18% gain now, probably 0.20% gain. So that's just what you want to do. So overall, gold still below the 250-day moving average, still in the downtrend, can't get over that 200. Silver, can't get over the December highs. Platinum, can't get over the recent, the 200-day moving is still in a big downtrend. So overall, it's really ugly. The only thing that was up today that I have, nice, the United States dollar. The dollar that everybody says you should be dumping right now. Not right now. The dollar will crash later on, I'm sure. I mean, I'm not stupid. I understand what's happened out here, but not right now. We have time. This is Joshua Hayes at BigWaveTrading.com. Great luck, everybody. We're going to make money, and not only that, I'm going to have a part 2 right after this to go into the shorts and to show you for you the longs that's set up. All right, have a great night. I'll see you tomorrow, or have a great day, because it's only like 5:50 here in Hawaii. Bye.